is Adebola Olatunbosun. I head investor relations at FairMoney, and today we are having our inaugural investors conference. The essence of us bringing the FairMoney to you is for you to understand the fact that we've been through a journey for 4 years. We've made tremendous growth and we've impacted the life of various Nigerians.
I'm Nicholas, one of the 3 co-founders of FairMoney. We started FairMoney 4 years ago because we realized that a lot of people didn't have access to financial services. We provide small instant loans to individuals and small businesses without collateral, without all the documentation which is required by classic banks, and that enables us to find a lot of people who need our services and who actually access FairMoney to finance their businesses or to face the problems they might have as individuals. And the goal of this event today is to make sure that we can all sit around this success and share the FairMoney story, share what we're trying to build, and get along with some people who would like to take part into the adventure.
Ladies and gentlemen, please do make welcome the CEO, co-founder of FairMoney for his welcome address in the person of Lauren Haney.
Good evening, ladies and gentlemen. On behalf of the team at FairMoney, it's my pleasure to welcome you to FairMoney's inaugural investor conference, and it's the first one of that kind. The conference was conceived to provide an avenue for capital markets operators, investors, Fintech players, regulators, industry associations, and other financial service market participants to discuss the role of digital financial models in providing meaningful financial inclusion for Nigeria. I also specifically want to thank all of the inviting guests from pension funds administrators, insurers, asset managers, trustees, fintechs, corporate organizations, of course the regulator, industry associations, family offices, HNIs, and any fintech enthusiast that cares about Nigeria's digital future. The largest global consumer-facing tech platforms, Meta, formerly Facebook, Amazon, Netflix, Google, and Apple, across 2020, actually reported a 36% increase in user base, 20% increase in top line, and an average 52% growth in market value over 2020 during the COVID pandemic. In 2019, we at FairMoney, we just raised a Series B round of around $40 million. In 2019, that would have been the entirety of the money raised for the sector. Only 2 years later, $800 million invested. And it's within this overall context and the recent fintech trends that I'm actually very glad to announce that actually also at FairMoney, we see the best year in 2021 since the inception. We've, as I mentioned, managed to attract larger investors like Tiger Global to the Nigerian economy. And we've also successfully launched a 10 billion private note that we recently closed. We are working to embed the regulatory and consumer protection requirements into technology and also the business processes. And our goal at FairMoney is really that compliance becomes a meaningful part of what we call in startup language our unfair advantage. We want to overperform in compliance. And we also look forward to partner with many more of you as our customer base continues to grow. Welcome again, and I look forward to a fruitful and productive event. Thanks.
So at FairMoney, we are delighted and proud that we try to take the customer first, and we are building the leading digital bank in Nigeria.
A topic around the economy. Since you're an active player in the ecosystem, I'll direct my first question to you. What would you say has been the level of acceptance and trust for fintech solutions by Nigerians? And what measures would you suggest would you propose to drive that demand for fintech solutions?
An economy maybe that is growing and hasn't had significant fintech activity usually starts with payments, right? That's why you digitize first, right? And then there's an evolution from that. As you get more data because of payment flows, you can then build on additional products. Now, when you start from payments, the challenge or what you have to solve is convenience and a good price point, right? So within the market, what we've seen is significant growth in digital payments, as Lauren talked about. So you're seeing meaningful adoption. That is what has made it possible for the additional or the other models to evolve, right? So you've seen enough payment penetration. Now you're seeing things like lending, right? Which is sort of self-demanded, so it doesn't cost you to get people to come and borrow from you. But beyond this, what you're going to see, and I don't think we're fully there yet, it's an evolution, what you're going to see is come up with models where customers are not asking a business for money, but are thinking about giving a business their money, right, for investing or for insurance. We are sort of halfway, right, in terms of the comfort that consumers generally have with fintech models. You're seeing some of the savings tech and investing tech business models, sort of raise large AUMs, right? And we're going to continue seeing more and more of that penetration. I think the last big thing to crack that would further drive penetration will be InsurTech, but that would be a while, right? Customers give you their money, you return it, and then eventually they'll give you their money so that you can insure them or you can pay out when an unexpected event happens.
Nicole, in your view, how else would you say fintechs have impacted the Nigerian economy positively?
The thing that I like the most about it is showing a different alternative kind of career path, an alternative way to kind of dream and build, right? The amount of people that want to be tech entrepreneurs, the amount of people that want to build for the problems in their everyday economy, right? I think that's the biggest impact. The amount of millionaires that our fintechs have created from really young people, I think that is huge. I think bringing regulators and commercial bankers and old school insurers and lenders to come and learn a new way of wanting to do something and bridging that divide, I think that is what Fintech and all of the work we've been doing has actually done and is a much bigger impact than just bringing in people and that inclusion.
We want to empower people to live better, to bank better, and that's what we do at FairMoney.
So my next question I'll direct to Mr. Ayer. We've also seen that many of the traditional players are still active and not giving up market share without a fight. Whether it's the traditional banks, whether it's a different universe of competitors like the telcos who have distribution and are trying to get licenses to do some of the things the fintechs will be doing.
For me, the biggest threat to fintech could be fintech. And I'll tell you why. The business of banking is trust. Bottom line. Yeah? Fintech, traditional, whichever way you call it, it's trust. And what is most important is that fintechs have to maintain a level of operations that is consistent, where customers can begin to move away from that is where I borrow money from, but this is where my salary goes to. Do you understand what I'm saying, right? So today, if I asked a lot of people here in the audience and said, how many people do your salaries go to a FairMoney, a Kuda, a Carbon, etc.? I don't think I'll see many hands. But if I said, how many people your account goes to, Zenith and whatever and so on and so forth, of course, it will be there. Now, history is important, and that's why I never forget history. For those who are old enough and remember how the banking revolution happened, and how the Zeniths and the GTs and so on and so forth came in around about 1989, 89, such. Prior to that, you had the banks, the dominant banks, just as you have them today. Then there were like, the Continental, this, and Savannah Bank, and so on and so forth. And just the same way, your GTs and your Zeniths and stuff are looking at a FairMoney and a Carbon, etc., and saying, who are these people that are coming to disrupt our market, blah, blah, blah. It's the same way those banks were looking at GT, that, and whatever, and look, who are these small boys coming in to come and disrupt our market? And guess what? Whether you like it or not, the word then was technology. So here's technology again impacting the disruption into the system, albeit differently. So, self-account opening, that never existed before. You have a way of identifying yourself. So all these things that the fintech industry is bringing to the market, because one of the things about human trust is that, you only allow it once, and once it bites, it bites. Good example, stock market. We had a stock market bubble, Nigeria. What year was it again? 2006,
the party ended
exactly.
2007,
right? Exactly.
2008.
You had the bubble, it bust, and then that's it. So the point is, my fear about fintechs is this whole icon. I mean, dude, seriously? And because the thing is this, there's a lot of, this whole, it's like, just pump it till it just bust. Jumia, case in point. So you asked me that question again. What's the danger of fintechs? Fintechs.
I'll pivot to bio. Without the pandemic, if that force of nature, if we could call it that, did not occur, would we have still seen or witnessed the same growth in terms of adoption, in terms of entrepreneurs trying to develop solutions to solve the very problems that they're trying to solve with different digital financial services? And even on the funding side, will we have seen the rapid growth at the same pace that we've seen over the last 18 months?
Yes, the pandemic brought technology front and center for a lot of people, for a lot of businesses. But the growth trajectory had been pretty robust. Go back the last, I would say, 10 years easily. There was something interesting that Sunny said earlier about fintechs needing to scale up beyond being fintechs. So don't be a fintech operator anymore. Be a digital bank. Be a digital bank and offer the entire gamut of services. You all spoke about insurance, InsurTech. A digital bank can provide insurance services, asset management, stockbroking, lending, the deposit mobilization, and the like. So I think that should be the direction.
I would direct this to Bayo. How can we develop that local pool of capital that can go into ventures or can support ventures as early as some of the fintechs are? How can we develop that sticky pool of local capital that can understand the dynamics of these opportunities, these ventures, properly assess them, and then eventually, ultimately, support those ventures by funding them?
So when you're looking to aggregate funds to invest in what people will typically see or consider to be high risk, you need a particular type of investor. But I also believe that you need to have an efficient ecosystem. So I think the ecosystem needs to be in place, because that is what will ultimately instill confidence in the investor community. Because the investors are also looking for decent returns, but they also, want to be sure that, these guys have the capacity to build credible businesses and deliver positive returns. So I believe the way to access local capital is have an ecosystem that is firmly established and ensure that every fintech player gets to go through a process. And you come out and it's like you have some certification because I have gone through Y Combinator, this, that, and the other. And that's like a badge of honor. And that is what would help unlock the significant local capital, because there's money here. And I believe a lot of businesses will prefer to have Naira funding today. And I think that's one way it can be done. Thank you.
I've been with FairMoney now for a year and a half. What I'm trying to achieve is to ensure that each client is assessed properly and gets the most tailored offer as possible. What it means is that each client's credit limit is assessed properly. It means that we are pricing every client properly so that our best clients are getting the best possible product.
And I think one thing that makes our company different from many other companies you would see in the market is that we have this value that's called passport is no talent, talent has no passport, talent has no passport. And what we mean by that is, we really try to hire across the globe to hire the smartest people with the best market experience in the problem that we're trying to solve, right? So you'd see, obviously we have many Nigerians, including myself, working on the problem in compliance, legal, tech, but we also have in the technology department, our CPO, for example, used to work for Gojek, one of the largest financial service providers in Indonesia. Our CTO used to be the CTO of Deposit Solutions, a very big fintech in Germany, and so on and so forth. So one of the things that sets us apart, and you will see that also in the room tonight, is that we really have a very international team that all tries to solve the very hard problem of financial inclusion in Nigeria. Thank you. Yes.
Another thing that's interesting is that we recently just got 2 credit ratings from reputable rating agency. We had BBB rating A3 from GCR, and we have a BBB A2 rating from Delta Pro as well. And this is just to tell you that we know what we are doing and we are here to stay.
What's next for FairMoney? We hope to continue to build upon what we have done in the past, and we look forward to getting more Nigerians on board and also empowering people across the country.
We launched a 10 billion naira private notes earlier this year, of which we have issued 2 series, and we were able to attract a wide range of reputable local institutional investors, and some of them I see here, and I say thank you for partnering with us. And in addition to that, and Lauren alluded to this earlier, we raised over $42 million in our Series B round earlier this year from international investors. And so, for us, this is important because what does this say? We're able to attract local and international investors. And so, what does that say to us? They like our story, they like the business that we've built, they like the team that we have built to tell the story, and they're willing to support us. And so for us, this is very, very key, and we are very proud about this, and we want to continue to do more.
I want to thank everyone for coming to the event. Most of our partners, debt investors, regulators, of course, many employees of FairMoney that work with us for many years.